Welcome everybody to our next webinar here at JFD Brokers. My name Stefan Friedrichowski, as always for those kind of webinars, a little bit statistics, a little bit trading, and today the title is simply the big strategy review. Before I really start, I should mention the date. We have the 26th of October 2017, 7 o'clock at least here in Germany. Germany is one point. It's always nice to have you all here. Looking to the different kind of names I can see, at least those names you write down there, I can tell you that we are quite international, at least it looks like. Being quite international. Names is a good thing as well, because in the German part of that webinar, which is always one day before, there's always one guy who names itself Mr. Draghi. And you may know that today it was a Draghi day once again, the EZB interest rate decision, but nothing really new happens. But that is not really the topic of today, but the name of that guy is always funny. I'm sure, or pretty sure, that the real Draghi is not listening to my webinars. But anyhow, so today the big strategy review means that I simply want to go through the list of a few strategies we have introduced during the last 6 months. Because I think it's not only a matter of talking about trading strategies, it's really trading those trading strategies. And therefore, from time to time, I should really show up all the trades I have done here with those kind of strategies so that you have a better impression of what I'm really doing here, and that I'm not only a talk master here. It's my real business to have those trades, to have those trading strategies, and therefore I want to share with you the results, the good and the bad, as the real trading is, and so you can be curious of the results. Different kind of trading strategies we have introduced so far. Yeah. The slides of today's webinar are already uploaded, so you can download them through the GoToWebinar control panel, as always. So those slides have some additional inputs about parameters of trading strategies, so they might be of additional interest. But if you miss anything, just send me an email. You see my email address here. S.Friedrichowski, complicated last name, so just name me Stefan at jfdbrokers.com. Yeah, so it's easy to get in touch with me, and for me it's always a pleasure to help you with whatever. So having said that, this, I have always to show up with this slide here. The risk disclaimer. As always, I talk about trading strategies. Indeed, I trade those trading strategies. But finally, if you trade always on your own. I think that is self-explaining, and you understand that comment quite well. So, what are the real topics of today? First, once again, I'll show that we are at the trade fair, the World of Trading in Frankfurt, just as an announcement. So if you like, you can see me personally and other colleagues at JFD. But then now about trading strategies. Before I show the real results of a couple of trading strategies we have introduced during the last couple of months, I want to focus you on how I personally review those trading strategies. So what are my key figures for that? Just looking to the total profit, or what else? So what key figures I have in mind when I look to trading strategies in general. Because if I look around, for example, to those social trading platforms where you can see a lot of trading strategies, it's always the same process which I follow when I personally try to judge any trading account or trading strategy. And then we go through a couple of trading strategies. So the first one will be the DAX day of week seasonal. Um, by the way, that's an interesting part. When I first introduced that trading strategy, somebody later commented in a way, oh God, now Stefan is talking about seasonals. Why the hell is he doing that? Um, Pure statistics. And then later he realized, oh, no, it's interesting because it's not just looking for different months and compare months maybe during the last 10 years, which is later than a statistics of 12, which is indeed not very heavy. But for in this case, trading the day of week seasonal is something different because now we have about 52 Mondays per year, 52 Tuesdays a year, and so on. And if we now look for 20 years, it's at least a little bit better statistic than the classical seasonals in the trading context. So that was really a nice remark because later he realized, hey, no, that's a great thing. And yeah, let's look to the results of the trading strategy as well. For me personally, it's a little bit like doing striptease here. Uh, I think you know what I mean. It's really showing everything as it is, and the good as well as the bad. So let's hope that we don't have too much bad things to report. But if it would be, then it's okay. It's trading, but it's a little bit better than that. So then the other principal concept of trading strategies we have been through here is what is called open range breakout strategies. So whenever we have a breakout from a time period, time slot, and we have a couple of strategies here. Originally, I think I only introduced three of them, and now I put one on top of that. That is a gold account. That is a breakout strategy running on gold only. So that is interesting as well. So I put the numbers for that strategy here on my slides as well. That means really the key figures, so breakout times and so on. And the other big concept have been power candles. So big candles which we see from time to time, and how to trade them we have analyzed, and so that will be another type of accounts. And then this topic of what I have introduced as being slightly martingale trading strategies. Of course, I know in principle martingale trading is nothing you should do, but we have learned how to tame that martingale concept by being not that aggressive, and that is now a little bit of a combination. You will later see that I use, for example, power candles as a trigger for opening a trade sequence, which is then managed martingale. So finally, I have a pure power candle strategy, yes, but I use something like that for a martingale trading strategy as well as the trigger. But there are two variants. One is an EMA following martingale strategy, and the other one is a power candle martingale strategy. Both are tamed. Tamed means they have stop loss, not like the real martingale approach. And yeah, we will look to that as well. I have been asked to mention those strategy explicitly here in the webinar because I have posted on LinkedIn some results of that strategy, and there somebody asked already, hey, can you show a little bit more on that during your next webinar? And of course I do. So the other topic is simply if you want to be in contact with me via LinkedIn, of course, no problem. You will find me definitely because my last name is more or less unique. So let's start. Oh yeah, this WOT announcement. So the trade fair in the middle of November. It's a Friday and a Saturday in November, 17, 18. Yeah, I will be in Frankfurt. You can find me at the booth of JFD. I have several webinars or talks directly there, and I have one special topic which is called a seminar, so you have to register for that. You will find me there as well, and there I will talk about who's the better trading, is the human or the machine. Interesting topic, I think. So hopefully the one or the other can show up at Frankfurt as well, and we can meet personally, which would be really a pleasure for me to see you and not only see your comments or emails. So that would be really great. But now back to our trading accounts, trading strategies. And first, for me, it's important once again to say what are the criteria looking to a trading account, because we now do both. You look to my trading accounts here, and you have to do the same job I have to do, always to judge, to draw the conclusion, is everything okay? Yes or no? Oh, sorry. Hopefully next time I mute my microphone first. Just a second. Now I'm back again. Hopefully that will not happen that often. So when we look to trading accounts, it's always important to have in mind trading is applied statistics. So what I always do then is I train my eyes, and training my eyes means I use that Excel sheet I have introduced here several times because it's more or less you can do a lot of things with that. So I don't have to explain that much. That means we have here an equity. We have a limit, so a hit rate, and we can simulate how a trading account might look with a specific hit rate, a specific gain, and a specific loss of a trade. And yeah, it might look like this one here. And I always only have to press F9, then I get a new equity line, which looks better, but is following exactly the same statistics of hit rate, 51%, and gain and loss are equal here in this case. So, but you see, even such a profitable strategy might have huge drawdowns, like here, but nevertheless, the slope is positive, which is nice, after 1,000 trades. But having seen this, assume you have started our equity or our trading results exactly at that maximum. So even 500 trades later, we are still in the minus. Even that might happen. So if we know how our strategy is running or what statistics are behind, we can use something like that to simulate the results. And now, once again, I've only pressed F9, so it's still following the exactly same statistics, and we have an account which has a negative slope. Even that might happen. If we are not that huge profitable, if I would enter here higher numbers, then of course more or less every trading account is going to the north, or So you see, whatever I do, I never get a negative slope here. But this is something we have always to keep in mind, that trading is applied statistics. But now, how to look on a specific account? So what I use is mainly two key figures. That's all. It's the first one, and that's very important, is a maximum drawdown. So so there's the highest distance. Let me go back here. Let me make the statistics a little bit worse here. So the longest sequence between that local maximum and finally the local minimum here, that difference is the maximum drawdown. So it's not losing trades in a row, which happens here from time to time as well, maybe even 10 losing trades in a row. Even that is not the drawdown. The drawdown is the maximum distance here from here to here, or just another example. So in this case, the maximum drawdown might be from here to here, or maybe from here to here. That is the maximum drawdown. Extremely important key figure. The other one is simply the slope of the equity. So I look, is the slope positive, negative? And if you want to simplify that even further, okay, then you can look to the total profit you have earned maybe after 1,000 trades or after 6 months or whatever time frame. And the important thing is always the relation, the quotient of those two numbers is the most important number, because that number is telling you more or less everything. The good thing, if you look for that relation, then the account size is not of interest. You might have a 1,000 euro profit and a maximum drawdown of 100 euro, or you might have an account with 100 euro profit and 10 euro maximum drawdown. Then those two accounts are simply identical in terms of profitability. So therefore, that relation, slope or profit, divided by maximum drawdown, is telling you more or less everything. So, of course, the number should be positive. And if that number is already higher than 1, then you are on a very good path. So then it's already behaving quite well. You will see everything today, but those two numbers, have them in mind, because those numbers will help you to really judge any trading account, really to draw conclusions. There's another question when I look to trading accounts, is the question, does it look like that there's money management behind, and especially are there stop losses in those trading activities? So that question should have a yes, and you know that if you look to my trading accounts, of course, every trade has a stop loss, and so that question is always answered with yes. But it's important to know that, because otherwise we would have in principle unlimited risk, and something like that I don't want to have in my trading accounts. But now, just a quick view here on that. You know, we have had that slide already before. Which equity here is the best? And having in mind exactly what I mentioned the last minutes, you can straightforward identify that equity number 2. So that brown line here is the best one, because that line has a moderate slope and very low drawdowns. So you might scale that account simply, and you have then the same profit like the red one here, but still not wiggling around that much. So the drawdown is still lower than from that red account. So that helps us looking for the slope, looking for the maximum drawdown, and that's extremely important. So the first trading strategy to be reviewed is the DAX day of week seasonal. And always when I talk here now about those strategies, I give you a short review on what's behind. So in general, seasonals are cyclic, reoccurring events. They create something like a pattern, and that is not always that visible. We want to have them, but that is exactly the definition of having any seasonal like year-end rally and so on. So that is a seasonal. But you can have other seasonals as well. It's not only related to months. It might be the day of months. So you might have heard that the stock market always at the beginning of a month goes maybe a little bit further north than the rest of the months, simply because people are reinvesting or big funds are reallocating their assets. There might be a reason, and I even don't know whether that's true or not. But other timescales might be a day of week, which is indeed what we do now later. And hours can be viewed as well. So the main assumption of all seasonal strategies is quite easy to conclude. Everything should repeat. So what we have observed in the past should repeat once again. And that is our statistical edge. That is our probability advantage. And what we have done is we have done an analysis from the DAX daily. And the first question has been, do maybe certain days a week, like Monday, is a Monday always a day which prefers to go north? So a long trade would be in favor. Or a Tuesday always, or statistically, more going south. And what we have learned, yes, there is such a relationship between day of week, but we need an additional input, and that input has been the question, are we in a bull market or in a bear market? And the definition here has been quite simple. It has been simply an EMA with a period of 40, and we define a bull market if we are above that EMA, and we define a bear market if we are below that EMA. And then we have specific days which in order to get the trade direction. And we learned that on Monday, Thursday, and Friday in the bull market, we should go long. And the two other days, Tuesday and Wednesday, we should go short. And if we are below that EMA, it's exactly vice versa. So how's the trading strategy running? Very simple. We look where we are compared to the EMA, and then we open a trade at 8 o'clock with a stop loss of 1.1%, and we trade more or less the open of the DAX. Practically, I can tell you that I open my trades at 8, 1 minute after 8, but that has only practical reasons, because during the first seconds, so close after 8, the spread is still not finally at the 1 point spread. So therefore, I open the trade always at 1 minute after 8, but that's only a minor thing. But practically, it's important because otherwise I would have to suffer from higher spreads. So stop loss is always 1.1% distance from my open of the trade, and the trade during the day can only be closed by stop loss, nothing else. There's no take profit, and so if the take profit is not reached until 10 o'clock in the evening, then we close the trade. That's all. So we don't have an overnight trade. We start at 8. We close latest at 10 if stop loss has not been reached during the day, which is not very often. That in this case, the strategy reaches the stop loss. So now exactly what I promised. I want to show you the real results of that trading strategy. So the procedure is now always the same. We look here to my trading accounts. We look to a specific account, and I will create a report here as we speak, because for me, it's important really to tell you, hey, that's my trading account, that's my result. So about that strategy, just looking for today, that's not statistics, but luckily I have a very good trade today. But let's think about the reason for that trade. So we are in a bull market. You see the EMA here. All my prices are above that EMA value. So what day do we have? We have Thursday. Thursday is a normal day. That means today morning, I opened a long trade at 8 o'clock, or just 1 minute after 8. I opened a long trade. Yeah, you see, looks quite well. So nice trade. Doesn't look that I will lose money today. And that trade will be closed a minute before 10 o'clock. So that's the trade of today. Just having in mind, yesterday was a reversal day, Wednesday. So yesterday there has been a short trade, which was finally still profitable. So that's nice. But now let's look to the statistics of that account. So let me create here a report so that I can really say and state it is exactly what I trade is what you see here. And that always takes a few minutes, or not minutes, that should only take. So the trading account started at 2,000 euro. Today we are at, now we will end a little bit higher, maybe around 2,150 euro. But now looking to that account and having in mind that what I mentioned about statistics, having in mind what is the actual drawdown of this strategy. Okay, maximum drawdown, we can read the number is 2.5% here. We are about 6-7% in the profit. So the relation of those two numbers is about 3, which is really running well. So it's a very good account. There might be people saying, "Oh, naja, I think that could be better. It's not that good account." And looking, half of the trades here went up here, and from there it's flat. Yes, answer is right, observation, but that belongs to trading, and that is exactly what I mentioned, or what I name applied statistics. The conclusion here is we have a drawdown which is totally in the limits. So in the set limits here, the limit, by the way, is 25%. So we are far away from that limit of 25% drawdown. We are profitable, and we have even a relation between profit and maximum drawdown of about 3. So what can I tell you? So I think great account. You will see not everything is as good as this one here, but it's an extremely simple strategy. You know the rules now. And by the way, if you are interested in more details, you will find on the YouTube channel of JFD all the additional information when I introduced that it's trading strategies. So there are recordings of those webinars, so you can have a closer look, and even to how to derive such a strategy. So that's DAX day of week trading. It's a wonderful candle here today. Okay, maybe only due to Draghi, I don't know. Whatever. Having that good trade today, you see, is only statistic. Okay, the trade is good today. You have seen we have had drawdowns in the strategy as well. It cannot be always going north. That would be too simple. But that's trading. So that's a day of week strategy. Let's go further. One other big let's call it chapter or trading setup, is everything around breakout strategies. And just to introduce once again that kind of trading strategy here, it's typically running the following. You have a chart, an intraday chart. We do this kind of strategy here only intraday. So we set two vertical lines, two point in times, and in this case here, one is at midnight, and the other one is at 8 o'clock. So that 2 point in times create a time range, midnight until 8. And then we look for the price range between those point in times. And then we have a maximum here. And the minimum, by the way, is here. You can't see it, but the candle goes down until here. And breakout strategies in general are always the same. At 8 o'clock in this case, you place two orders, one buy stop order at the upper end and one sell stop order at the lower end. Stop loss is always the opposite range. So stop loss of the sell order is the red line here, and stop loss for the long order is this horizontal line here. In most cases, the strategy runs as OCO orders, meaning one cancels the other. So in the minute the short order has been triggered, the long order is cancelled, deleted. And as always, if somebody explains the strategy, trade is running well. But that is just picking the right example firsthand. And you see, price goes down. So that the breakout strategies have, let's call it the belief, the assumption. If we have a breakout, that breakout should be long lasting, going in the same direction, not coming back. Of course, it's not always as nice as this example. We will see in a minute, but that's a principal logic of all breakout strategies. Since I talk here about breakout strategies only intraday, my trades are always closed latest at 10, because I don't want to have swap costs and even maybe weekend gaps, something like that. Therefore, I close all the trades before or at around 10 o'clock. There might be other degrees of freedom, further options, I called them. We might use an EMA as a trend filter so that we not place both orders, the buy stop at the upper and the sell stop at the lower end of the range. We only place one following an EMA as a trend filter. You might have other parameters like a maximum range size. That means if the builded range is too big, then you don't trade at all, so you don't place your trades. Or you might use a minimum range size, because if the range is very small, then a little bit noise just would kick you out of the trade, because the short is triggered going a little bit north and your stop loss is reached. So even that might be a good idea of further filters, options, or degrees of freedom in my language. At least the last one here, gut feeling, is not really something we can introduce mathematically, but anyhow, even that might be within your trading strategies. We have a couple of them. We have introduced one, which is trading DAX and S&P 500. Originally on an M5 chart. It's not really in an M5 trading strategy. I would not call it an M5 strategy. It's only because we have time frames, or we have time ranges which are created on an M5 chart. So for example, we have one range for the DAX between 10 minutes after 10 until 40 minutes after 11. We apply an EMA as a trend filter, so only one direction is traded. Of course, we have a risk-reward ratio for the trade. In my previous example on this chart, there the risk-reward ratio has been simply 1. But now we have other numbers, and we include a minimum range as well, which is good to have. The downside is, at least for the last couple of months, and I can really tell you months, I have had nearly no trades in S&P 500 because S&P 500 is more or less sleeping. So the volatility is extremely low, meaning I don't hit my minimum range. Yesterday, there has been a trade all of a sudden. One trade has been triggered yesterday in S&P 500, but I think that was the first trade since 2 or 3 weeks. And that trade ended in the minus. But anyhow, so we have in total 6 setups, sub-strategies, simply that open range breakout. And once again, we look for the results. So that is on another account. It's this one here. And today we have the funny situation. If you read here a little bit within my chart, then you can see always smaller minimum, smaller minimum, smaller minimum. So today I don't have any trade at all. So in both DAX and S&P 500, I have not a single trade today. So a long trade on DAX would have been fine, but I have not reached my minimum range, so therefore no trade. This case is not quite often, but today is such a day. So looking to the trade history, let me check. Yeah. So the trade, the account started with an account of 4,000 euro. And up to now, we have reached a little bit, nearly 200 euros. So 4,000 has been the starting value. And now let's have a look here. So that's the account result after, oh, just a second. I have to look. I think the strategy runs, 6 months. Now, 6 months trading activities. That's the result. So looking, same thing as before. Maximum drawdown, 7%. Right now, we are total net profit. It's close to 5%. So the ratio between profit and drawdown is a little bit below 1. I always prefer bigger than 1, but I'm profitable. I have drawdowns, but everything is okay. Could it be better? Yes. Of course, it could be worse, but it's a profitable account. 6% about, no, not 6, 5% about trading result up to now, 6 months. Okay, not that bad. If that would go on further, it would be 10% after a year. That's enough, at least for me. So I'm still happy with that kind of trading strategy as well. So why not? Good. So that is an index breakout strategy. We have others. Let me show you first the two in principle. We have introduced 2 others on Forex, one on Euro Japanese yen, which is more close to my introductional chart. But the range times are here from 3 o'clock in the morning until 10. So if I write down here 9:59, it means principle 10, but that's only to tell you at 10 I place my orders. We use an EMA as a trend filter and a risk-reward ratio close to 2. That's for Euro Japanese yen, and the other one is there are people around which call that a modified Big Ben strategy for British pound US dollar, and there we have entry or the range time from 6:45, so it's in principle it's not an H1, it's in this case you might call it an M15. Anyhow, it's 6:45 until 1 o'clock lunchtime. It's even trading with risk-reward ratio close to 1 and even below. And here I use really OCO, but I apply another rule, which is a maximum range. And funny enough, yesterday there was an example. So yesterday there was no trade because the range was too huge. And so that's the number here. So breakout strategies, in this case on Forex, running on Forex. Let's look to the result here as well. So first thing was British pound, no, euro, Japanese yen. Yeah, what do we have today? You see no open trade, simple reason, because we have had a long trade. And that long trade has reached a stop loss. So the trade went, you see, a little bit here to the north. That was a trigger of the trade. And later we reached our stop loss, which is good if you look how it's developing further here. But anyhow, so that was a trade of today, a stop loss trade. Looking to the key figures, the 1,000 euro account right now about 7% plus. And let's have a look to the complete result here as well. For this account running for 6 months now, and equity looking this. So you see, in here we have had quite a huge drawdown, nearly 11%, or let's say 10%. But now we are nearly at the same level in the profit. So still we have a positive trend, we have profit, but my relation, my reward risk ratio, it's now a little bit other number than the typical risk reward ratio for entering trades. Here it's my reward, which is about 8%, compared with my risk, which is now here the maximum drawdown of about 11%. Still profitable. So I don't hesitate here to go further with that strategy. It's positive. It's behaving well. I know I have drawdowns, but that's trading. The other account is even a little bit reverse, but you remember we have now 3 results positive. Now let's look to British pound, US dollar. And here, what do we have here? We have an open trade. It's a short trade for today. A little bit in the plus, but anyhow, trading accounts, that's the smallest account I trade here. That's a 500 euro account, currently at 503. So let's say we are exactly where we have been starting, and complete review looks like this one here. So and you will see in a minute, we have been quite profitable, and then we lose once again everything. So we have been up to 10% in the plus. Now we are back at starting position. So what can I tell? The slope would be positive, but it is as it is. This account runs now for 3 months. Starting at more or less 1st of June. No, then it's 4 months. So those are the results. Once again, that's trading. So I don't have any indication to say, no, I should stop that trading. So why? I go on here with that strategy still further. And now the one I think I have originally not really introduced, it's trading gold. Here I have, once again, a quite different logic. I use sub-strategies, yes, but I have 3 short strategies and 3 long strategies. So only if my condition is fulfilled, the comparison to the EMA, then I would open that short trade. There's another requirement, that is the minimum range. I have some different times. All the ranges start at 1 o'clock in the morning. They have different end times. And of course, I have different EMA parameters as well as risk-reward ratios. So in principle, that strategy might do 6 trades per day, which is practically more or less never the case, because we fulfill the short criteria as well as the long criteria within 1 day with EMAs of those numbers. In most cases, the strategy trades maybe 1 trade a day. With those time periods, and looking to the results, where we are, that was this one, and now we have the gold account. Today is no open trade for that strategy, and let's look to the real results that you see always. I'm really trading. And not only talking about trading. Start equity 2000, starting from 6 months ago. And that is the equity. Honestly, looking to that kind of equity, it's more or less a dream equity, but it is as it is. So drawdown is only 1.35%, which is really low. We are close to 10% profit. So the ratio is about 7 or in that range. So performance extremely well. Nearly no drawdown in that strategy. Okay, not that many trades. I agree, but it's a filter. It's a filter of minimum range, which makes sure that we only trade when the volatility is high enough, and if not, we don't trade. And you see quite well results. So those kind of breakout strategies running well. So we have now 4 breakout strategies here. One is more or less neutral, so being back at starting position, and all the others, the 3 others, are quite profitable, the one more than the other, but once again, that's trading. So those are the breakout strategies. Let's come to another chapter here, and that is a chapter of power candles. Power candles is an interesting thing as well, because when you might remember that when we introduced that kind of concept, I have something in mind here additionally, and that addition is that such big candles occur a little bit too often than pure statistics. So that means we have too often 2 big candles. If we would have just a Gaussian distribution or whatever distribution, we would not have them. And therefore, I call them the black swan events. And those events have they reveal that we are out of the randomness. So the price changes are not that random as normal, and they are indicated by those power candles. And that is always a chance for us as being a trader, because we need that deviation from randomness. And that's the logic behind power candles. In most cases, yes, they are driven by news, like today, EZB interest rate decision, or any other news, even not good news, which might happen around the world. But whenever those news pop up, then the big market but market participants, they reveal their real interest. Now they have to change maybe their position. And for them, it's difficult, much more difficult than for us. We trade maybe 0.01 lot, maybe 1 lot, even maybe 10 lots. But think about the big ones. They have to trade 10,000 lots. They cannot just throw one order in the market. No. They have a huge amount of money to be maneuvered. And that is difficult. And when news pop up, they show their real interest. That's what we used, we have analyzed, and it's typically something like this one here. We have a power candle, and then we found that we have a typical behavior after such a power candle. And if we have something typical, that is our edge. That is our statistical advantage for trading, and that's how we come to those trading strategies. I want to show you results from two of them. One is based on H1 power candles, which is this one here. We have a few open trades. €1 British pound, $1 US Swiss franc. Right now, you see already, or you can imagine where the account started. The account is in the minus. So we started at 2000 with that account. But let's look to the complete history here. So here we are. And you will see everything happens, plus, minus. Hopefully it pop up here. There we are. Computer needs some time. So starting 6 months ago at €2,000, and that's how it looks like. You might say, okay, nothing earned, nothing lose. But yeah, we are in the minus. I don't, so we have €30 minus right now. Drawdown has been 7%, which is maybe from here to here, or maybe from here to here, I'm not sure. So more or less the account is running flat. Do I change the strategy? Answer, no. Why? It's still running. It's not that bad. It's not earning, but it's not really burning money. So I don't see any evidence here to stop the strategy. So we have a nearly identical strategy running on D1, and I hope it will pop up here. Oh, that was only popping up very short, starting at 2000 and now finally earning €140. It has been already more. You see we have a couple of open trades here for the different symbols, and let's look really to the equity. The equity is always telling you more than the number of profit of €140, because then you can see the shape of that account 6 months now, and it's running this way. So once again, yes, there's a drawdown, 3.5% here. In total, we are at about 6% plus. So that's okay. That's good. Relation is about 2 between profit and maximum drawdown, bigger than 1. Equity slope is positive, so running well. So I'm satisfied with that strategy as well. That was the chapter about power candles. Now, last chapter, a little bit to those slightly martingale trading strategies, which is really an interesting topic, and I'm still not through. I create, honestly, one additional strategy per month, which is in principle based on that kind of concept. Just to introduce a concept shortly, The original martingale is from the roulette table, and originally you do something very strange. Whenever you lose, you double um, your next trade, so to say. And if you would do that on a roulette table, putting your money on black or red, then your equity might look like this one here. And once again, I can create equities. They have a common feature. They have something like a straight line which goes north, but there are always extremely big spikes to the south, like this one here. And that's the reason why, in principle, a martingale strategy is nothing to be traded. But we found something how to tame it. And there are two things for taming that kind of strategy. Being a trader means we need a stop loss. So we have to apply a stop loss. Stop loss alone does not help us, even for a martingale strategy. What we need additionally is the right selection of underlyings. So we need underlyings, for example, if we want to trade both directions simultaneously, like we're going short and long simultaneously, and then we manage those trades in a way that if the long trades is in the loss, then at a certain limit, we buy. You know from textbooks that is something you should not do. But the right selection of underlyings helps you. And I can tell you, we have to trade such a strategy on those underlyings which don't show a good trending behavior. So we need underlyings which tend to wiggle around. Those are the underlyings in favor here, and we find them. So that is one way, even going long and short simultaneously, and I will show you an example of that strategy as well. The other one is, remember our last webinar, we talk about the predictive power of indicators. So even looking back to our power candles is something we can use for slightly martingale strategies. If we have a power candle and we know that we have a statistical edge into the direction of that power candle, so why not opening a long trade if the power candle goes north, and then manage that trade slightly martingale. And slightly martingale in my language here means I open a trade with 0.01 lot, and if I have a certain loss, then I open another trade with 0.01 lot, not doubling, nothing. And I iterate that, but still that package, that sequence of trades has a stop loss. And you will see that I reached in some cases that stop loss, but you will see how that kind of strategy really behaves. Let me first show you the example with that I have once reached exactly that stop loss. That is here. So that is a trading account which has, no, that's the wrong, where we are, sorry. Here we are. So that's a trading account of 25,000 euro. We are in the minus. You see, if you look to the pictures here, you see really nice trade sequences. Focus a little bit here on the middle of euro, British pound. You see that's such a sequence, that is a short sequence. So there has been an initial short trade, then rebuying, and then we got the profit. And we have long trades simultaneously as well. You can't see it exactly in the figure here, but now let's have a look really to the complete picture. So let's create a report for a strategy like this one here as well. And you will see there has been exactly one trade sequence reaching the stop loss value. And therefore, that's the reason why the account is still in the minus. It's now acting since, I think, 2 months. Is that right? No, it's 1 month. No, it's a little bit only more than 1 month. And trading a lot. And that is a result here. So that strategy earns about 500 euros per month. And I have this drawdown here, which is in this case 4%. I'm still in the recovering, and I need about 1 additional month. Then I'm back here at starting. And I know that those things like getting that drawdown will happen from time to time. But it's important that I have that stop loss. Without that stop loss, it would be a no-go going for that kind of strategy. Currently, the strategy is in the minus, but I'm pretty sure that will be recovered soon. I mentioned that we can use a statistical edge as well for something like that. And let me show you a small portfolio of those strategies, and that is a portfolio of 4 trading accounts. Let's start with one, and I will go in every detail here, but the portfolio consists of 2 EMA and 2 power candle strategy. This is one example of EMA. It's trading strange symbols, and those 3 symbols create a triple. Triple means here Australian dollar, Canadian dollar, Australian dollar, New Zealand dollar, and then New Zealand dollar, Canadian dollar. So that is a complete triple, and that is following an EMA approach. So we open the trade into the direction of the EMA, and then we manage those trade sequences as slightly martingale, and that create exactly those plots with green lines are profitable trades, red line are non-profitable trades. But the sum of all those lines, which finally end here, is then always positive, at least if there are green lines as well. So this account here, for example, started at 3,000, is now at 3,086. And I have the same here as an EMA counter. So I go my trades against the EMA, and we have power candles as the original trigger. This account is, I think, the best one here, starting at 3,000, now at 3,300. And now let's look to that finally here as a portfolio. So portfolio means still this strategy runs on demo. The only one I show results here on demo because it's still my test phase for that strategy. And you see the results. It's extremely positive. I have reached stop loss values here as well, but you will see. So that's the equity, the combined one I could not create directly out of MT4. Yeah, that's the way it looks like. So you see, I have drawdowns even in that kind of strategy, but they are small, and I have something really going north extremely well. So looking to the key figures, drawdown is 0.4%. That's more or less nothing. And total return 6.7, and that only after 1 month. Sorry, 2 months. So monthly return is here 3%, which is an enormous result, which is really fine. Behaving quite well. I'm happy with that kind of strategy, and there will be others in a few days following exactly that kind of approach. And the approach here means I use the combination of managing the trade slightly martingale with that linear increase of my lot size if I'm in a loss, and combined with that statistical edge for the entry, like an EMA, like a power candle, like an RSI indicator we discussed in the last webinar of predictive power, and exactly that will be the next one here in that concept, based on an RSI indicator for the entry of such a trade sequence. So behaving well. Let's do a quick summary. What have we seen? We have had 2 accounts in the minus. All the others are in the plus. A few of them even heavily profitable. And the 2 minus accounts was the one just 30 euros, and the other one is in percentage, it's 2% in the minus, so that's still okay. And all the others are profitable, and a few of them are really highly profitable. Nevertheless, we have systematically derived trading strategies here, and still I don't make a statement or conclusion like that this means that we generate automatically profits only. No, answer is no. You have seen those results as well. And I hope you appreciate that I being that frank with all my trading results here. I think there are not many traders around the globe doing something like that, that transparent. You may hear that I'm smiling because you may know why only very few traders are that transparent with their results. Anyhow, in sum, we obtain with that kind of approach profitable results up to now. Is that a guarantee for the future? Answer, still no. The good thing is that we have a couple of strategies being self-adapting, especially all the last one I have talking here. So they are always self-adapting, so they change their parameters more or less automatically. It needs my personal input, but only working-wise, but in order to start the right programs here. But still, I'm not in a position to say there's any guarantee. Answer, no. But it looks good, and I'm quite satisfied with the results up to now. Let's see how it goes on. I will do reviews in a couple of months once again with new strategies, old strategies, because I want to share my results transparently with you. And I hope you appreciate that kind of a presentation here as well, even if it have been a lot of equity lines today. But anyhow, I wish you all the best. Have a good evening and hopefully see you again, maybe in Frankfurt and otherwise in the next webinars here. So there will be still 2-1 in November, and both are related to new and other trading strategies and analysis. You will see. I hope you enjoyed. Bye-bye and have a good evening. Ciao.